Hello, everybody, and welcome to this webinar on mergers and acquisitions. This is episode 6 of our continuing episodes on different topics that we think are interesting in the finance field. And we're very happy today that we're going to be joined by Alex Mathini, who's a partner at Coulson Honey at Bowmans Law. So we're going to be discussing with him about mergers and acquisitions. And just to get started with the session, I think other people will join us as we move on. How we're going to structure the session today is we'll have a quick introduction from myself. That's going to be between now and 11:10. And then what we will do is we'll then jump straight into the chat with our speaker for today. That's Alex Mathini. And then we'll open it up to Q&A for the last 15 minutes between 11:40 and 11:55. So if you have any questions, feel free to type them into the chat and we'll pick them up towards the end and answer them. And then we'll wrap up between 11:55 and 1200 hours. Something important to note is that we're recording the session. You will get a copy of the recording subsequent to this. So if you sort of like hear something that you'd like to go back to, this is something to be able to get access to. So let me do a quick introduction about ourselves, just in case you're attending these webinars for the first time. Invest Africa is a financial advisory company. We do a couple of things. The first is project and corporate finance advisory. This is where we put items such as mergers and acquisitions, due diligence, valuations, pricing, and so forth for various clients. We do a lot of financial modeling, build, training, and audit. If you'd like to perfect your skills on that, you're very welcome to contact us and we can have a conversation around that. We'll leave our contact at the end and you can go to reach out to us. We also do capital raising for both projects and for companies. And we'll speak about some of the projects that we've been involved in. And the last thing we do here is work very closely with the public sector in different assignments. One of the critical ones that we've been working with has been an assignment in Zambia, advising the government of Zambia in terms of setting their fiscal regime, their taxes basically for the corporate sector. I think it's one of those that we've really enjoyed working on because with a lot of impact. I will request everybody to make sure they've muted themselves so that we don't get any feedback. Moving on from there, some of the things that we've done or some of the clients we've worked with. These are some of the clients we've worked with at various points. We incorporated in the year 2012, became very active from that point onwards. So that's some brands there that you may be able to see. The previous webinars that we've had have touched on various topics. And these are some of the topics, these are some of the topics we've touched on. So feel free to visit our YouTube page. You can also just go to YouTube and just say Invest Here YouTube page. You should be able to find some of these topics. The most recent one was the role of PVC inspiring the SME sector, which we did in collaboration with Strathmore Business School. And we chatted with one of the partners in one of the private equity companies. We also had one on strategy during turbulent times. So feel free to interact with the content as we keep building the library of interesting content that we're working on. So for today, we are very fortunate to be joined by Alex Mathini, who is a partner at Bowmans. Now, something interesting about Martini and myself is that we go way back. So I've known Martini since, it is going to be since the year 1997, where we were together at Thika High School. I think we're in this, I don't know, Alex, you'll confirm whether we're in the same class or in different classes, but we graduated on the same year. And after we graduated, we happened to find ourselves also at law school together at the same time. And we went through 4 years of law school at Parklands Law Campus. But after that, I sort of like took a detour into finance. He remained in the legal practice and is now a partner at Bowmans. And I'm really glad that he's here today to share his experience in this space. So I'll just read his bio very quickly. So he's a partner at Bowmans Kenya in the corporate department. Alex practice mainly focuses on mergers and acquisitions, private equity transactions, tax law, and general corporate and commercial law. He holds an LLB from the University of Nairobi and a postgraduate diploma from the Kenya School of Law. He's a certified public accountant and he's also a certified public secretary. According to Chambers and Partners, as of 2021, Alex provides a suite of corporate and tax services to clients with notable experience acting on cross-border acquisitions, corporate tax planning, and distressed M&A. One of the commentators praised his commercial sense and understanding of a deal. I think he's the best person to have for this conversation. I've been fortunate to work with him on a transaction, and I was quite impressed with his grasp of M&A. And so, I mean, I'm really happy to have you on board, Alex, for today. So I'm going to request if you kindly just put on your video. And before we get started, there's some few quotes here that I picked out that I think might be interesting for us to consider as we get started. I'm not going to read through all of them, but I found a couple of them interesting. One of them was these mergers are like marriages. They are bringing together of two individuals. If you wouldn't marry someone for the operational efficiencies they offer in the running of a household, then why would you combine two companies with unique cultures and identities for the same reason? I found that interesting. Then there was these two that were maybe on different sides. Successful enterprises are built from the ground up. You can't assemble them with a bunch of acquisitions. Right? I like that. And then there's this that then speaks almost like opposite to what I've just mentioned. The key to making acquisitions is being ready because you really never know when the right big one is going to come along. So I'm going to stop sharing my screen and invite Alex. Alex, maybe just to get started. You've seen the quotes. I don't know if there's any that you want to pick out on just to make a general comment on, you agree, you disagree, you want to add on to, and so forth. And of course, you can also add something in terms of your introduction. I don't know whether I did justice to that. Alex, welcome.
Thank you very much, Stephen. It's a pleasure to be here. I'm just checking, can you hear me clearly?
Yes, I can hear you very well.
So, Stephen, first, thank you for the introduction. I mean, at some point I was blushing when you gave me all these platitudes, and I did wonder whether that was me being described. Thank you very much. I love the quotes, actually, and the one that stands out to me is the marriage one, because it is a perfect description of a merger. Now, the thing about marriage is you never really quite get enough experience in it, so you will see couples that have been married for ages. I mean, good case in point, Bill Gates, who's been married for probably 30 years.
Hello, Alex. I don't know whether Alex was about to say something bad about Bill Gates and Microsoft decided to disconnect. Alex, we can hear you now. You can continue.
Sorry. Okay, I'm going to reserve my comments about Bill Gates. Can you hear me now?
Yes, you can.
Okay.
Please go ahead.
So I was saying, I do think of a merger as a marriage, in the sense that there's all the work we do to get the transaction going. But in addition to that, there's actually, you have to think of what happens after the merger. You have to think of the post-merger integration, the culture, are the two parties compatible? And that to me is one of the reasons where the objectives of a merger are sometimes not achieved. Steve?
Okay. Thanks for that. And maybe we can just take it back to the beginning, right? I know there's someone who maybe has joined, is just like, you know, M&A is usually used as one term, but they're very different and they mean very different things. Maybe you can start us out from that point. What is a merger? What is an acquisition? What's the difference?
So the two terms, as you point out, are sometimes used almost simultaneously. A merger is where you have two entities coming together to form one entity. Now, in advanced jurisdictions such as Mauritius, you actually have a facilitating law that allows company A, company B to form, automatically become company C, okay? And company A and B C is existing. In Kenya, we do not have that. So when we talk about merger, what we are thinking of is company A acquiring the assets of company B. So company B is left as a shell and then wound up. And then all the business that was being done by company A and company B previously is now done by company A and B, company A as a combined entity. Okay, that's what a merger is commonly is understood to mean. Now, an acquisition, on the other hand, is where you have company A acquiring company B, either the assets of company B or most likely the shares of company B, such that company B becomes a subsidiary of company A. And we do have various examples of this in the market. So I'll talk about some transactions I've been involved in. For example, KCB acquired National Bank. So National Bank became a subsidiary of KCB. Now that's an acquisition. As we speak, the two banks are still running their separate businesses, although National Bank is a wholly owned subsidiary of KCB. On the other hand, you have a merger such as the NCBA merger. You had CBA running separately, doing its own banking business, NIC running separately, doing its own banking business. Now, a merger was effected, pursuant to which the banking business of CBA was transferred to NIC. The bank was renamed NCBA Bank, and now that is the entity that continues to run the banking business. Okay, and that is an example of an acquisition. And typically, sometimes you actually have a merger and an acquisition and a merger, or vice versa. Yeah.
Okay, that's really good, and I like that you've given us some really high-profile examples that I'm sure everybody relates to in the financial services space. Before I dig into those two, maybe we can just, do mergers and acquisitions happen in other sectors? I know you've given us financial services, but have we seen them happening in any other spaces, at least in the industry in Kenya?
Absolutely. So Steve, I'll start with the one you and I recently closed, which is the acquisition of the Meridian Group of Hospitals by Africa Health Holdings. Okay, so that was an acquisition where we had this private sector fund come in and acquire a majority shareholding in the Meridian Group of Hospitals, which a lot of the audience will be familiar with. A couple of years back, I was involved in the acquisition by National Cement of the business and assets of ARM. So ARM was under administration, under distress, needed financial rescue, and National Cement came in and acquired the business and assets. And going forward, it's running its previous business as well as the business that was previously run by ARM. So if you go to the market now, you'll see there's the Simba brand. That's the cement that has always been produced by National Cement, and there's the Rhino brand, which was the cement that was previously being produced by ARM. So that's another example of an acquisition.
Okay, brilliant. So then now let's go back to the example you gave us earlier, KCB, National Bank, which was an acquisition. Sorry.
What's in the box?
Joyce, maybe we can mute everybody to make sure we don't have any problems. Alex, you still there?
I am.
Okay, brilliant. So I was going back to KCB, National Bank, CBA, NIC. One was a merger, the other one was an acquisition. So why would why did KCB, and maybe you may not know the specifics, but why did they choose to go for an acquisition rather than a merger? And in the CBA case, go for a merger rather than acquisition. What motivates what choice you make as an investor or as a player in the industry?
So I am actually familiar with both matters. I'll start with the KCB one. We had one player, this is National Bank, that was in distressed needed capitalization, and they were actually looking for an investor. You then had KCB that was looking to grow its business, acquire more branches, essentially expand its outlets in the market in the region. So it made sense for both parties, where KCB acquires National Bank, gets branches that it did not previously have, and for National Bank, it raises the capital it required for its business. Okay, so that is the reason that that was structured as an acquisition, KCB acquiring National Bank. On the other hand, when you look at NIC and CBA, these were two players of relatively equal size, both wanting to grow. None needs the capital more than the other, and who have then appreciated it makes sense for us to merge, consolidate, utilize economies of scale, and essentially grow more in the country and in the region. So actually, the NCBA transaction involved not only Kenya. We had both entities were in Uganda, both entities were in Tanzania, and then CBA was also in Rwanda. So through that, through the combination of the two entities, their consolidation, you suddenly had NIC and CBA, which were previously top 10 banks, become the third largest banking entity by assets in Kenya. So I think I will say the main reason that made this merger rather than acquisition is you have two players who have the same commercial aspirations, then coming together and appreciating that coming together will lead to growth to the two of them.
Okay, so what I find interesting about what you've mentioned is maybe in one case, there's a capital consideration that one party needs capital. And so it's almost like KCB is buying into National Bank. So fast, do they need to buy 100% for it to be called an acquisition, or can they buy a small stake? If they bought a 20% stake, would it be an acquisition?
No, so that would typically be referred to as an investment. An acquisition is when you acquire a majority control. Okay? So an understanding of acquisition is when you get more than 50% and the entity then becomes your subsidiary, you're able to consolidate your accounts. That is what will be deemed an acquisition. And Steve, I'll give you another example. Another transaction I was involved in was when Rubis Energy acquired Kenol Kobil. Now that was 100% acquisition, and that was driven by different reasons. You had Rubis Energy, who had been looking at the region, seeing this as a prime region. They would like to set up a footprint, and then you had Kenol Kobil, who actually wanted to exit the business. So what Rubis then did is they entered into this transaction, acquired 100% of the shares of Kenol Kobil, and essentially through that were able to start operating a business in Kenya without starting a new entity, a greenfield entity. Subsequently, what they then did was Rubis acquired the assets of Gulf Energy, and in a matter of 3-4 years, they are the largest player in the downstream petroleum sector in Kenya.
Okay, interesting. Now I've seen a couple of the people who are participating who are also from the startup space. And they're sort of like hearing you mentioning big names, and they're wondering, do startups acquire each other, or it's only or merge with each other, or is this a foray for only big brands, so they shouldn't be thinking about this at all?
Absolutely, yes. So I can think of a number of acquisitions in the startup sector. We had I was involved in a transaction involving Big Square. This is the restaurant group, which most of us will be familiar with. They were acquired by a company known as Mega Foods, I think 3 years back. And similarly, Java, when it started off, has been through a number of acquisitions, with each then investor growing the business, taking it to a certain level, then on selling it, it being acquired by probably an investor with deeper pockets will take it to the next level. At the moment, Steve, also, I would also say we are involved in quite a lot of transactions, a lot of acquisition transactions in the startup sector, in the mostly by venture capital funds, which will typically acquire a majority stake in fintech type companies in the technology space with a finance tilt to it.
Thanks for that. So now let's then get to the meat of it. And I like that you have so much experience, startups, big corporates, healthcare, petroleum, whatever that might be. So and we can maybe focus on mergers first, then we'll move to acquisitions. What would be the top considerations as far as you're concerned for a party that says, hey, should I merge with party B, for argument's sake? In your view, from a legal perspective and also from the experience you've gained doing these transactions, what are some top considerations you'd put out there?
Okay. So I will say, I know we lawyers consider ourselves quite important, but you will find that if you talk to most business persons, most entities doing M&A transactions, they'll tell you the last thing actually on their mind initially is the legal focus. The first thing is usually the finance consideration. What are our commercial aspirations? What do we want to achieve by a merger? And then you look at the potential target and see, does this target actually assist us in getting to where we want to do? So there'll be considerations such as, what is the valuation of this entity? Is that a price we are willing to pay? And what are the expected returns having invested that amount of money? Now, Steve, I know you, Steve Ogada, you guys like talking to us about IRR, how you measure returns and valuation. I think that's one of the very key considerations driving the merger agenda. So from the commercial, we then come to the due diligence concerns, things like what are the potential liabilities, what are the potential exposures I and as an acquirer will face in acquiring this target. Am I concerned about taxes? Has this target been paying its taxes? Does it face any key litigation? And then, of course, there's the post-merger integration. You look at you look at the culture of your firm as the acquirer. You look at the culture of the target, and you then see, are we able to integrate? Because that will drive performance going forward. That will drive whether you achieve your objectives following the merger.
Okay, brilliant. Is there anything you'd like to add on the acquisition side, or are the considerations, would the considerations be relatively similar?
I think the considerations are similar. I think the only point I would add is sometimes you have what are referred to as financial investors making acquisitions rather than merging. Now, when financial investors are making acquisitions, and a good example is this transaction we just closed relating to Meridian Group of Hospitals, where you had the CEO or the person or the partner of the private equity fund, Sangu, who's a finance person, acquiring a hospital. He does not know how to run a hospital. So a thing he will be concerned about is he going to be able to retain the persons, the doctors, the people who actually run the hospital? So employees, human capital, that's a very important consideration.
Thanks for that. And for the people who've just joined us, who didn't join from the beginning, we're going to have an open Q&A session in the next 10 minutes. So if you have any questions, feel free to type them into the chat, and we'll pick them up and respond to them between 11:40 and 11:55. So Alex, let's go to legal. That's your field. And maybe the question is, what are the key steps from a legal standpoint? Assuming, yes, we found company A, we like them, we're like, yes, we want to do this. And now finally it's the time to invite I don't know that the lawyers would be called the people who adjudicate the process finally, or the priest or something. What are the key steps that happen after that? And maybe as you respond to that, you can also just mention what are some of the challenges you've seen in being able to fulfill those key steps.
So typically lawyers will come in at the step where the term sheet is being negotiated. In most transactions I'll be involved in where there's a draft term sheet in place, and I'm told to just look at it from a legal perspective and see that there are no issues of concern. Okay. Once the term sheet is signed, we go to NDA stage. So the parties, the merging parties or the party making the acquisition, they've signed in the term sheet. They then signed in, they enter into NDAs, non-disclosure agreements or confidentiality agreements. And the aim of this is to preserve confidentiality so that there is free exchange of information going forward. Once the NDA is signed, then the merging parties are free to exchange information necessary for due diligence. So we go to the due diligence stage. You'll typically have a financial due diligence, a tax due diligence, a legal due diligence, and others such as operational due diligences, environmental due diligence. And the aim of this is to identify whether there are any red flags, identify, for example, whether the financials that have been presented for purposes of valuation are actually the situation on the ground. Assuming no issues are raised from a due diligence perspective, we go to the transaction agreement stage. This is where you'll then enter into your purchase agreement, typically either a share purchase agreement or a business and asset purchase agreement. So there's negotiations around that. We then proceed to signing. Once signing happens, we go to the conditions precedent stage, whereby typically in Kenya, you'll need certain regulatory approvals. The most common one in most transactions is the approval of the Competition Authority of Kenya. You may need sector-specific regulatory approvals, such as CBK, the insurance regulator for listed companies, the capital markets authorities. Once your conditions precedent are fulfilled, you go to completion, closing. This is where payment occurs versus the relevant transfer. Okay, or if you're talking about a merger, this is where the entities are then merged. So you have a transfer of business from B to A. And then after that, it's really the post-completion formalities, making the relevant filings at the company's registry, effecting the relevant transfers at the land's registry, and matters such as those. Now, some of the challenges we've seen, each transaction stage poses its own challenges. I think the one that has been noted in the recent past is where parties assume regulatory approvals are going to be granted without fuss, and actually then regulatory approvals become a problem. And a good example is when we had the Airtel and Telcom merger, whereby the regulators actually became a problem. We had the Competition Authority of Kenya approve the transaction, but with certain conditions that were not feasible for the parties. So the transaction fell through. Steve?
So regulatory approvals, and I guess that takes a bit of time because, at times maybe competition authority, they're not sitting and so forth. You have to file different documents and so forth. But let's move back a bit to Didi, right? And I know that legal Didi is one of those that are found having significant challenges. Even the other sorts of forms of Didi, but I find that the others usually can be sorted out to a certain extent. What are some of the challenges you've found in legal DD, and how does someone sort of start to prepare themselves, assuming they are an acquiree, to ensure they don't face challenges and they don't have unusual delays during that process?
So the first point about due diligence is really to prepare a data room. Now, particularly during these COVID times, most of the due diligence has been done online. So it's become a standard practice to have a virtual data room. Now, as soon as you start discussions on a on a merger or an investment transaction, an acquisition transaction, then as a target, as an acquiree, it does make sense to engage your advisors, your professional advisor, your legal advisor, and put together your information in an organized data room, such that when you give access to whoever is conducting due diligence on you, they're able to find all the information they require without fuss, without delay. Okay. Now, the typical issues that will come out of the legal due diligence, we did a due diligence in an entity whose one of the key assets were certain properties, and actually, when we then due diligence the properties, two properties did not belong to them. Similarly, a few years back, we did a due diligence. I'd say actually 10 years back, we did a due diligence on Nakumat when they had a major investor, Satya Capital, coming in. And when the survey on the property came, the property was identified to be on a road reserve on Thika Road. Now, that was amongst the various reasons that the transaction fell through. But a year down the line, when Thika Road was being expanded, the supermarket, the mall that was on Thika Road was actually brought down. And that contributed to a loss in value. So these issues have to be checked during due diligence and to see whether there are any areas of concern.
Okay. And I like that idea of you saying that, I don't know, maybe it's an extension, that one thing you could do if you're the acquiree or you're thinking that some point someone may want to hire you, nothing stops you from doing your own DD in advance, right? So that you know what are some of the key issues that may come up. You create your data rooms and so forth. Now, there's something you raised at some point, and I want to jump onto that. You say that you could have a transfer of assets and business, and I may be paraphrasing, or you could transfer the shares, so to say. Do you mind just giving what's the difference there, and why would someone go for transfer of assets versus going for the other perspective?
So when you do a transfer of shares, that's the more common, more straightforward transaction. You buy the entity as it is. You do not pick and choose. You buy it as it is. So if you buy National Bank, you buy the shares in National Bank, it comes as a whole package. It's assets and liabilities. Okay, and that's the more common, more straightforward transaction. However, if you want to be able to pick the assets, you want to not pick certain liabilities, not be liable for certain liabilities of the target, then you want to do a business and asset transfer transaction. So this is where you actually identify all the assets of the entity, move them across. You take the employees, move them across to the new entity, and so on and so forth. Then you won't inherit things like the tax liabilities of this entity. You will not be liable for example, its litigation obligations, because you have picked specifically your assets and liabilities that you want to acquire. Now, in real sense, effecting a business and assets transaction can be quite complicated. Takes time because you're transferring asset by asset, contract by contract. Employees, you need them to sign to agree to be transferred to the new employer, to the acquirer, filling which they either remain or are declared redundant, and that does raise employment concerns. So doing a business and asset transfer transaction is not straightforward, takes much more time, and you only do it with very specific reasons in mind. I mean, and Steve, a good example of when you will have to do a business an asset transfer is when you are acquiring assets, for example, from a company under administration, because you do not want to acquire this company under administration and then have to deal with all the creditors. So the transaction that is commonly struck is then you need to pick the assets, the business that you want, you agree on the value, and that is then transferred to you.
So would I be right in saying, for instance, like in the Nakumat case, where there was significant liabilities and so forth, would that be a good case where an asset transfer? Because I think we can say about Nakumatt, maybe Task is also where Naivas has taken quite a number of the stores. Carrefour took a number of the stores also for some of them with ShopRite. Would those be some cases, perhaps?
Absolutely. Those are good examples. If you had done an Nakumatt transaction, it would not have made sense to buy Nakumatt as is. You actually buy specific assets, intellectual property, take over the employees you want, etc. ARM, same thing. When ARM was put under administration and National Cement was acquiring ARM, they will not buy the whole company. So we had to actually identify the assets we want, transfer them along, transfer contracts, transfer employees, intellectual property, etc. Yeah.
And in that kind of case, can you buy the brand? Can you sort of like say the brand is worth X? So I'm gonna take the brand and leave almost a company. And how would that look like? Because I guess the brand and the company at times are conjoined twins, so to say.
Absolutely. So in you look at the brand. So a company, a good example is, for example, ARM. Now, ARM had many brands. It had the name ARM as a brand in itself, but the cement that it was selling in the market was known as Rhino. So the name ARM had probably become, because of being under administration, had probably was not as valuable as it was previously. Okay, so in that case, we did not acquire the name ARM. However, the brands, the cement brands they are under, and there were about 10 good brands we acquired. There were even certain fertilizer brands that we acquired. So yes, you need to pick what you want. You leave behind what you do not want.
Okay, that's interesting. That poses a very interesting valuation question that we shall consider in subsequent conversations. So let's just, from a legal perspective, and I want to sort of like try and summarize into that. If there are any questions, I can also welcome them. What are some must-dos if you're sort of like just to advise someone who's involved in an M&A? And I want you to wear two hats. So you probably can wear the hat of the acquirer first, and then wear the hat of an acquiree. And just maybe 3 key points that you say these are must do's based on my experience, and don't do this under any circumstance, so to say. So maybe we can start with you wearing the hat of the acquirer.
Okay, you will find, Steve, that actually the considerations are quite similar from both perspectives. The first thing I will say is, first, you have to engage proper advisors, people who have experience of this kind. So you must get a good financial advisor, you must get a good legal advisor, persons with proven experience in this, because they'll be able to hold your hand when you're doing a transaction of this nature. The second thing is communication, and communication is in 2 aspects. You have to speak very openly to your advisors, be very open with them, do not withhold information, and they are then getting surprises at the very last minute. And secondly, you have also to, guided by your advisors, also communicate your key commercial objectives, your key legal objectives to the counterparty, so that you ensure that from the onset, the parties are very aligned commercially, and they are not then getting surprised when the deal is about to close, which can actually lead to a termination of the deal. Yeah, those are, I think, the must, the must I will say. Of course, do not withhold sensitive information to either your advisors or to the other parties, because this information always comes up, and sometimes it tends to be a deal breaker, which you do not want to do at the very end, having incurred significant costs, etc., and wasted a huge amount of time.
Thanks for that. I like that. Proper advisors and communication, being very open, and I certainly share the same sentiment. In some transactions I've been involved in, it's like you really never know what the parties want, one of the parties want, until it's too late, so to say. And maybe on this point, how have you been able to manage this, especially when you're dealing with cultural issues, right? Because there's some cultures which are known to be very direct, especially a Western culture, so to say. While we have the Kenyan culture, which at times I find that people say we are passive aggressive, when people never really say what they want. You have to read between the lines. How do you manage that from a legal perspective?
It is a real challenge, as you say, particularly when you're talking about the sort of more traditional African family-owned businesses. It is a challenge. Now, certainly it's a discussion you have to have with your client at that time, tease out the information, express the need for communication, give them a few sort of disaster stories, and hopefully that works. But I'd say 60% of the transactions, particularly where you're working for the more traditional African family-owned businesses, then you will always get surprises at the end where something comes up and you are wondering, oh, you should have told us that because we would have been more prepared.
Okay. That's good advice there. Just I like the whole idea of sharing horror stories, so that people know that it can end up badly. So better prepare really well. So there's a few questions that have come up here, which I just want to jump to here. So let me just open this properly. So Samuel Joroge asked, does capital gain tax liability apply for asset transfer transactions?
Yes, so it does. So it depends. There's two types of asset transfer transactions. There's what we call transfer of a business as a going concern, which is where you acquire all the assets of the business, all the employees. You leave the liabilities behind, but essentially, once you acquire it, then the assets are run as is. Now, in that case, the business is valued as if you had done a share acquisition, and capital gains tax is computed in much the same way. But yes, capital gains tax arise. Now, on the other hand, where you're only acquiring certain assets, then you have to break down asset by asset. So for example, if it's property, you compute the capital gains tax for the property. If it's machinery will not attract capital gains tax. You look at it asset by asset to then determine the capital gains tax liability. But yes, capital gains tax is always a consideration whenever you're doing.
Thanks for that. Next question is from Kezia. In a case where an acquirer purchases the assets of a struggling business, how are the liabilities settled, and would creditors block such transactions?
Very valid question. So in such a transaction, typically you will have, as part of your conditions precedent, consent of the financiers. The financiers will need to consent to the transaction before the transaction can go ahead. So in a lot of these cases, in situations of administration or insolvency type situations, you will find that actually the bank, the financiers are the ones pushing the sale, leading the process. The sale is by administrators who've been appointed by the financiers. Now, the financiers will have a huge say on the price. They will say, this is the minimum sale price we want. Typically, almost like an auction of a property, where that process is, the auctioneers are appointed by the bank. So what then happens is the price will be paid to the company, because the sale is by the company and the administration, and then distributed to the creditors, who will typically be the financiers.
So get the necessary consent ahead of time. Okay, if you have more questions, feel free to type them. We still have another 7 or 8 minutes before we sort of come to the close. But Alex, we're in strange times, COVID. What has this done to the market? Has it been the dampener we thought it would be? Have transactions kept on being resilient? How have the nature of transactions changed in terms of how they're being done? Are there specific sectors that perhaps are interesting? Are transactions being done differently now that there's COVID? Is there more mercy from acquirers? I don't know. Very open-ended question.
No, understood. I'll start with how transactions are done. That's the easy part of it. Essentially, because of the hampering, the travel restrictions that are there, the aim to keep physical distancing and so on, what we've seen is a lot of the transactions are now done virtually. So a data room is set up virtually, you do your due diligence online, okay? Rather than physical meetings, what we're having is calls between parties, Zoom calls, Teams calls, essentially to negotiate the transaction documents. What also it helps, the positive thing about it is that transactions are probably done faster. There's more faster turnarounds rather than previously where you had to arrange for meetings, come down to Nairobi for the parties to meet. Now parties are able to meet more frequently, so transactions are faster. Yeah. Okay, that I think has been a positive of the pandemic. In terms of transaction activity, I would say there's been a slowdown, but I will say it's mixed. So sectors that have been very hard hit by COVID, for example, the hospitality sector, we've not seen any activity in that sector, I would say from 2020, whilst in 2019, we had been involved in a number of transactions in that sector. On the other hand, there are sectors that have become very active. Technology sector, for example, IT, and not just in Kenya, not just in the region, globally. You have entities such as Zoom attracting a lot of investment activity. In Kenya, you have a lot of fintech type players attracting a lot of venture capital activity. Okay. Secondly, you then have the financial investors, private equity funds, venture capital funds. Those need to do transactions to survive. Their business is doing transactions. So when they realized, when they've realized this COVID is here to stay, they then go ahead with transactions. The advantage with them is they are able to pick targets in certain sectors at much favorable prices because of the COVID pandemic and the fact that a lot of people are having capital constraints, a lot of businesses, and a lot of businesses who will be competitors for acquisition targets are actually holding on to their cash. So a lot of the M&A activity now is being driven by private equity funds and venture capital funds, and they are picking businesses, targets at very good pricing.
Okay, that's interesting. And is there more mercy? A company saying, you know, we know you had a bad year, so let's structure something favorable for you.
Okay, so I have seen, I will not call it mercy per se. What I have seen is more sophisticated structuring. So, I mean, a transaction I'm currently involved in where the parties have agreed for valuation purposes, if we use your values for this year as they are now, then we will acquire too huge a stake. And you've told us that that is not the real value of the business. So either we use your values in 2019 before COVID, or we use current year values, but we give you a loan. And then when COVID is over, we convert that loan to equity at the price then. So we've seen certain very sophisticated structures which work for both parties. I will not call that mercy. I will say that a lot of these targets are very good advisors.
Okay, that's good to hear. And I like that idea of, you know, once we've stabilized, so I don't think COVID is going to be over, so to say. I think we're in the new normal, but once we are firmly in this new normal, then we feel like we're adjusting. So there's some two additional questions here. First one is from Philip Wambugu, and I'm going to say tongue in cheek here. It says, excellent presentation. I have a tailor-made question. Both of you being advocates, does any of you have experience in merger of law firms? What is the experience and what are the pros and cons? So Philip, as you may know, I don't want to call myself a lawyer, an advocate, because I'm seeing the advocates in the room, but if this room was free of advocates, I would claim that title. But Alex, you being the advocate in this case. So what do you think about mergers of law firms?
Well, I think there is room for it. I do not believe that this market has experienced a lot of that. We had the 2015 merger of HHM and Oraro, which did not work out. I still think there is room for that, although practically, because of the Kenyan market the way it is, because of the ease in which you can quickly set up a law firm, you will find that what most people will prefer to do is set up a law firm and then look to tie up shop with either an international law firm or maybe players or your colleagues, your friends who've been out in the market for longer. But yes, you will. If whenever I read the lawyer, I see that there's in the UK there's a merger of a law firm happening every week. Some mergers have worked out, some have not worked out. Mostly it's a culture issue more than anything else. Yeah, I think it's something to consider for this market.
Then just moving on to the next question by Boniface. If an acquirer takes the business or the assets unattached, right, so where they buy the assets, they leave the business with the debt and so forth, and they also restrict the old firm from offering competition in case they're able to sort out, their debt, sort out their position, and then they come back to the market? Or do you then say, we hope they don't rise from the dead?
Very valid question, very good question. Yes, that is an essential provision in the contract. You do not want to acquire a business and immediately, as soon as you've paid the other party their monies, they then actually start competing with you for the same customers. So you will typically agree a non-compete period for a number of years, typically between 3 to 5 years, where the sellers cannot compete with the business you've acquired. And sometimes where you're negotiating, for example, with the Americans, they even push that the non-compete be for 10 years. They say that that's what they are paying for.
Okay, good. We need to start wrapping up. So I'm going to ask you a question that's not related to M&A before we wrap up. And so it's a question I like asking because at times we get lost in the midst of all this negativity, COVID, whatnot has happened. So could you share with us one personal anecdote, a story, something that keeps you positive amidst all the challenges the world is going through on a day-to-day basis? It doesn't have to be mergers and acquisition. Let it be personal.
Okay, thank you, Steve. You always like surprises right at the end. Well, the one I can think of, it's tied to an M&A transaction. I remember when I was a very young lawyer, this was my first transaction. We were acting for Helios, who are investing in Equity Bank. And I remember, so I was probably 3 months a pupil. I did not know who was our client. Just been told to go and do a due diligence, and I go and meet, and I know our clients are West Africans. I go and meet this West African who I believe is the client, and then I have this discussion with them and start telling them about the target, and these are the areas we need to watch out for. And after I've spoken to him for 2 minutes trying to impress him, he then actually introduces himself and tells me he's the business development manager for Equity Bank. And as you can imagine, I was quite embarrassed. I was actually worried for my job for some time, but he took it with very good humor, and from then on called me the very sort of eager lawyer, eager to impress. So he called me eager lawyer at all times. Yeah.
Nice. Thank God he was a kind person. And it's good to hear those kind of stories, because at times people imagine mergers and acquisitions being this very competitive, winner gets all, loser gets a zero. So it's good to hear those kind of things, that people still have humanity sort of like embedded into everything. So Alex, thank you very much. We can't thank you enough. Please do type your contacts, and we can share them with the participants. If someone wants to reach out to you, if they have any questions, if they're like, we want to find out what your rate card is like, can we afford you? Maybe, we can make that connection, or you can just share an email. To everybody who's been able to join us, maybe we can show some appreciation to Alex now that we cannot clap for him physically. there's some nice emoticons where you can click on reactions. And let's give Alex a clap. At least he can feel some love from the people who attended the session. Thank you very much. Alex, you can see there the claps filling in on the room. We had a very good participation from everybody. So thank you very much. We appreciate you, Alex. We appreciate you, participants. Keep in touch with us. We have our socials where you can be able to, let me just make sure I pull this out, where you can be able to reach out to us. We keep organizing these kinds of sessions because we think they're very good learnings where you can pick out different things and you can meet some very interesting speakers. Yeah, and I'm going to leave it at that point. If you'd like to get in touch with us, those are our contacts, and we can take the conversations forward. Asanteni sana, we stop, it's 1200 hours, we want to stop at that point. Thank you, Alex. Thank you, everybody. You're on mute, but I think...
cheers, Steve.
Yes.